It's hard to believe that today, Friday, April 3rd, 2020, we are where we are. Think about a month ago or 6 weeks ago, no one ever would have comprehended that we could be in this place in today's coronavirus crisis. All your strategic plans that were nice and shiny and being implemented are now on the shelf as we try to understand and rationalize exactly what the coronavirus crisis is and what it means to our businesses. I'm Joe Galvin, Chief Research Officer from Vistage. I'll be joined in just a minute by Dr. Adrian Cronje, who is a longtime member and top-rated speaker from 2019 to talk about some of his insights in terms of manage your business through crisis and beyond. What this is called is a black swan. Up until they were discovered in Western Australia in 16797, I believe, it was believed that no such thing as a black swan existed. It was a foundation of parables and stories. And in 15th century London, it was a common phrase to describe the impossible, and it simply can't happen. Advanced to today, and a black swan event or a black swan theory is predicated on three things. One, a black swan event is completely unpredictable and completely surprising. Two, it has a profound and lasting impact. And three, maybe in retrospect, we should have seen it coming, right? The most recent would have been 9/11. Certainly a surprise and a shock to everyone. It had a profound and lasting effect. And looking back, maybe we should have anticipated it. Well, it's safe to say that no one anticipated that coronavirus is the black swan that we'd be dealing with. But because it is, we have to begin to understand what this means to our business and adapt to this very fast-moving event. We took a survey. Our survey was open in early March, March 2 through 9. And that survey, we asked the question, what was your level of concern about COVID-19? And you'll see only 15% at that point. Now, again, you're talking, this is a month ago. This is 3.5 weeks ago. Only 15% were extremely concerned. We were in a state of denial. We had the information. We had seen what was going on in China. No one anticipated or expected that this would happen to us. And we moved into this state of denial. And what that's taken us to is kind of trying to make sense of how this all fits together and where and how we are and how to plan for this. So we created something we call the Corona curve. You go to the next chart, please. Think of this in terms of business activity. Where was your business activity at? Just call it middle of January, before this really got on anybody's radar. What was your business activity? The Corona curve is like a bell curve, only it's inverted, because we're going down into a lower level of business activity, and hopefully at some time come out the other side. If you click in the next chart, if you click on the next one, you'll see that it's initiated by a trigger event. And this happened in Wuhan, China. We started reading about this in January. I was at a Vistage VES in Dallas in February 11th talking about this emerging flashpoint called the coronavirus. And we went into the state of denial. We heard it wouldn't happen to us, no problem. And then there was a tipping point. That first week of March was the first time the market tanked on us. And then the following week was the first time travel restrictions came into play. And all of a sudden, we're now sliding down the slippery slope of the Corona curve, not really knowing where it is or where the bottom is. We went through this a couple of weeks of trying to realize what was really happening. Now we're starting to search for the bottom, and maybe after 3 weeks or so of quarantine, we've now slipped into this level of business activity, the new normal of survival. And what this has really become and where we are now are the early days of what's called the Great Wait. The Great Wait is we're sitting here, we're waiting this out. We're waiting to get more data. We're waiting to understand how long and what the implications would be for everyone to commingle again. And no one knows how long that's going to be, but at some point, we're going to look for signs of life. And maybe we're starting to see that now in China, where they talk about that 70, 80, 90% of their manufacturing is back online, that the life is slowly returning to normal as people begin to move out and move together. But maybe we also haven't gotten all the information, and maybe the information, the data we've gotten hasn't been accurate. So we don't know, but eventually we'll get to a point where we need to reboot our business, reboot American business, small and mid-sized business. And then we'll move into recovery, and eventually we'll get to some new state of normal, whatever that will be. There'll be some profound changes. Obviously, you work from home, that genie's out of the bottle, and CEOs are gonna have to deal with that. The acceleration of technology will only double down now, as technology has played such a key role, and other new aspects of our business life that'll be part of the new normal. But right here, right now, we're trying to understand where our members are. So we've been asking, we have our survey open now, our April survey. Traditionally, we only go to our small business, 20 million or less, but we ask a couple questions. I want to share you this. This is in process. The survey doesn't close till next week, but it's really insightful. Because remember too, this is the Vistage demographic. And our members are manufacturing, construction, wholesale trade, We have some retail, but not a lot. We don't have a lot of hospitality, obviously no airlines. So you think about those verticals that have been hit first and hit hardest, they're not necessarily a core part of our group. But so you look at our group and what you see is 25% have had no change or they've seen an increase, maybe because they're connected to the healthcare supply chain in some way, or a lot of our professional services companies like Adrian's, people are turning to them for expert insight and advice. 42% have declined 0 to 25%. I think everybody's taken a bit of a hit here, but you can see it's only when you get now to 25 to 75 that you have companies that are in real distress, right? And that's just 20%, not to minimize that, because if you're there, it's certainly hard. 7% are down 75% or more, and these are the folks that are really challenged because revenues have gone from something to maybe zero. We asked our next question, again, was to look at, our next question is, what was the size of your workforce changed? And again, we see 58% have had no change, and that's great. 31% have declined a little bit. And again, we see 10, 11, 12% that have had to make some pretty dramatic and definitely difficult CEO decisions. And again, this is data. We opened this survey up on Wednesday morning. So this data is just 2 days old. And if we go to the last question, you'll see that what forms of government aid and other financial assistance are you planning to leverage? I know Adrian will get into this. I know the PPA and the small business loans, that's taking place and kicking off today, and we'll talk more about that later. But what's interesting here is the traditional EIDL disaster loan, 36%, 82%. Everybody's jumping in to the federal Paycheck Protection Program. I thought that was interesting. A line of credit is strong, a restructured debt. Again, what we've been suggesting to folks, and again, Adrian, we'll look forward to your thoughts on this, is one, first make contact with your local banker. And when you do, make sure you understand the key data points about your business, your cash flow, your revenues. You need to prepare for your interview with the SBA when that does occur, but you want to start with your local banker, and we'll go from there. And that leads us to Adrian. It is such a pleasure to have Adrian with us today. Adrian Crane is Chief Executive Officer and Chief Investment Officer of Ballantine, a wealth management firm serving entrepreneurs and business owners. Cambridge educated economist, Adrian's a 10-year member of Vistage. A number of his business partners are longstanding members as well. Adrian is a frequently requested Vistage speaker, and you'll see why when you hear his content here. It was recognized as one of the top speakers for Vistage in 2019 for his presentation on how capital markets lead the economy. He and his colleagues have offered a number of articles available to Vistage members on a variety of topics, from capital markets to managing your business through crisis, communicating with lenders. He works with business owners, entrepreneurs to advise them on financial planning, money management, and their business holistically. I know when I get Adrian's newsletters, I devour them right away because they're always insightful, and he delivers a perspective that is both unique and insightful, and it always makes me think. So Adrian, thank you so much for making yourself available, and help us. Recession, red lights are flashing. Oh my goodness, the red lights are twinkling. Welcome, thank you.
They are indeed. Thank you very much, Joe. That's a very kind introduction. I'm humbled to be here. Thanks again for the invitation. You know, as you said, Ballantine has been a part of the Vistage network for many decades, and many of my partners have been long-standing Vistage members as well. And the guidance we've all received from our group members and chairs over the years, well, you know, I could say that Vistage's fingerprints are all over what we do. So I'm very grateful for the opportunity to give back to our community of business owners and entrepreneurs during this time of crisis for our country. And the best way I can think of us giving back to you all is to share this unique vantage point that we have. You know, we're advising business owners on their financial planning and investments, taking the future of their businesses into account in a holistic way. And we're business owners ourselves, so I hope you all know that we've walked a mile in the shoes of everyone listening to this call. The insights and lessons I'll share with you today are tried and true for us at our firm, and we've advised our business owner clients to implement these very same concepts. Before I get into it, though, I want to acknowledge this very sad and deeply concerning period in our history. We are all white-knuckling through this together and are very focused on our businesses, each of us on this call. We're all connected today in some way to someone who is facing perhaps some of the most difficult days of their lives right now. By now, it's rare if anyone doesn't know someone who has been affected by COVID-19, someone who's fallen ill, or someone who has lost their job, or at a minimum, fears for each one of these scenarios. And as I listened to Joe talking about the survey, the amount of complacency we were all dealing with just a month ago, and the way in which the scenario has changed has been absolutely remarkable. I feel like the last 3 weeks have felt like a year, as I'm sure you all have, and it's been breathtaking to witness and experience. And as business owners like you, we at Ballantine are striving to stay focused on what we can control so that we remain in the driver's seat, not the passenger seat of the car, as we manage our way through this crisis and look to the opportunity beyond. So as we digest the implications of the Vistage CEO Confidence Index, and by the way, Joe, what a great source of data and insight that has become to me as a Vistage member, because it truly does give a sense of the conditions on the ground in small and medium businesses, regardless of what the media is reporting. I want to reinforce my central message, and that is that capital markets lead the economy, not the other way around. They can give you a guide to the future if you're prepared to invest time in understanding the messages they send. And I want to share with you our playbook to navigate the crisis and ready your business in a post-crisis world for a position of strength. This is what we're advising our clients, and this is what we are doing in our own business. So, it's stunning. I'm a PhD economist, as Joe referenced, and I've said before that stands for poor, hard, and determined. But I've been telling Vistage groups for many years just how limited economic theory and forecasting techniques are at calling major downturns. And I've been advising them instead how to be students of the capital markets to predict the future. You can see this resource down at the bottom of this slide. Are recession red lights flashing? This is an article I've written and a presentation I've delivered to many Vistage groups across the country. And I want to stress another point. As horrific as this coronavirus pandemic has been to date, and will likely continue to be in the next few weeks, there is unfortunately a precedent for this global health pandemic, and that is the 1918 Spanish flu that many of you have probably read about already. So even the worst estimates of the human toll compared to what was seen back then globally and in our country. However, what is unprecedented, to Joe's point about the Black Swan event, is the suddenness of the resulting economic decline on account of voluntarily shutting the economy down. This has meant a record fast transition from an economy with considerable momentum, breaking records for the longest ever expansion in history, and bumper profits for businesses, to instant recession and losses. And in terms of the recession, it could be a V or a W, or even the possibility of an L. And of course, the key question is what has already been priced into the stock market today after a 20 to 25% decline. The reality is that dividend cuts and share buyback suspensions have already been announced by many publicly traded companies, and they continue to be announced. And so the stock market has already begun pricing in this instant severe recession. Stock markets, bond markets, credit markets, and commodity markets together will lead the outcome as to the shape and the timing of the recovery. And this slide shows those 4 key indicators. The stock market forecasts future corporate profitability. The bond market is a key signal about future interest rates and Federal Reserve policy. The credit market measures optimism in the corporate sector. So think about that as the CEO Confidence Index for big business. And then the commodity market, which really provides a temperature check on the international global economy. And if you look back 14 months ago, 2019 looked like a fair to strong year. And by the way, that was an out of consensus call from us because many people were calling for a recession in 2019. 2019 indeed turned out to be a good year for the economy, and these indicators were right. And in fact, at the beginning of March of this year, these indicators were signaling prosperous times were likely to continue. And then suddenly, in the weeks of the month of March, these capital market indicators went from fair and strong to recession red lights are flashing all across the board overnight. And the speed with which this has occurred is truly unprecedented. I mean, it has never happened before. I've invested through 2 full market cycles, and the speed of adjustment has been simply breathtaking. I'm going to conclude my remarks today by emphasizing that these indicators are actually what is going to give you a guide as to the future economic environment. The breathtaking speed of events over the last few weeks does not negate this key insight. And so the challenge of 2020, and this pivots off of the slide that Joe presented on the cycle, is that we've gone from a booming economy and record 50-year low unemployment to a severe recession and staggering job losses in the space of a few weeks. Call it jump to recession to arrest a global health pandemic. That's what's never happened, not even during the Spanish flu of 1918 that killed 50 million people worldwide and 675,000 in the US alone. Recessions that are not caused by exogenous shocks or the black swan that Joe referred to usually take 10 to 18 months to play out, leaving business owners ample opportunity to course correct. So the breathtaking speed of this black swan event over the last 3 weeks has been unprecedented. And to show you how we've all experienced this emotional vortex, you know, normally investor psychology of greed and fear changes slowly and predictably over time, as this slide shows. But in 2020, we went from thrill to despondency overnight. And so, of course, the key question now is, now that we're at this point of despondency, or as Joe referred to, the great waiting game, how quickly will we recover? In the meantime, I'd like to offer some suggestions on how to manage your business through the crisis and beyond, just as we're doing at Ballantyne, and then turn our attention to that key question. So as it relates to managing your business through crisis and beyond, it obviously happened very, very quickly. And while investors traditionally ride a roller coaster, or at least advised to become accustomed to the volatility that's required in order for their investment programs to fulfill their goals, instead, it felt a little bit more like a bungee jump into freezing water. From a business owner's perspective, this has been extremely challenging. As I said, normally we would have a year and a half to prepare our business for a recession. And instead, after enjoying a bumper period of growth and profitability last year for many of us in the Vistage network, our businesses have suddenly been plunged into crises. We've been literally ambushed by this global health pandemic and moved from growth to survival mode overnight. So our perspective at Ballantyne is crises bring both clarity and opportunity. They test the resiliency and adaptability of your business and your people to manage through a sudden period of stress. While this pandemic is tragically inflicting human suffering on a staggering scale, our message to business owners as they manage through this crisis is that they should not overlook the opportunity to make decisive changes to put their businesses on a trajectory for even more significant growth and profitability when the great waiting game is over. Specifically, there are 4 key areas for business owners to consider, just as we are doing for our business at Ballantyne today. Firstly, build resiliency. Increase the resiliency of your business model to manage through the crisis. Secondly, apply best practices. Apply those lessons from the great financial crisis to 2020's great coronavirus crash. Thirdly, accept aid. Take advantage of the significant government assistance available to businesses through the CARES Act. There is already talk of additional 4th round of stimulus coming from the federal government, and assistance coming to business owners like ourselves. And I know Joe presented a webinar diving deeply into the implications of the CARES Act earlier this week. Fourthly, and this is hard to do, I'll admit, be strategic. We will get through this. Of course, the question is, how long will it take to get through? But start thinking now about positioning your business for a world after the crisis subsides. So let me expand on each of these points in turn. Firstly, on the point of resiliency, you must build resiliency for your business. And that starts with you, the leader. Take care of yourself. As a leader, you need to be mentally and physically present and effectively manage your stress. Try to find time to rest and recharge in whatever way works best for you. And I'll know, being a father, just how hard that is when many of us have to shelter in place at home with young children trying to do school. Many of our clients are benefiting from using the variety of mindfulness apps that are available today. Others are taking the time to talk to family or doubling their exercise routine. The heavy burden of responsibility for so many people and families is a stress that only we business owners appreciate. So find a routine to control your negative emotions during the long hours of exhaustion. Consider establishing a nerve center to facilitate consistent daily communication with all your employees, especially since everyone is working from home in isolation during the current crisis. Increase the cadence of management meetings to regularly check in with your key leaders so that you don't make decisions in a vacuum under duress. I would argue that it is very, very important to take Vistage legend Charles or Red Scott's first business cardinal to heart. Don't run out of cash, no matter what. Model how much runway you have to keep your business going with cash on hand and access to credit lines, and stress test a base case and a worst case scenario. That way you can unemotionally and proactively tease out the priority of decisions that you may have to make if the crisis takes longer to subside. Quickly identify the non-essential expenses to cut so that you can increase your runway to get to the other side of the crisis. A little success in good times, as we all know, can create a lot of unnecessary overhead quickly. At Ballantine, we run our business like we run our investment portfolios for clients, with an emphasis on ensuring that a quantified multiple of spending needs or expenses is kept in cash at all times to get through crises without disturbing a strategy or permanently impairing capital. That has always been our first line of defense against the potential for black swan events. Deploy as many resources as possible to serving your clients and customers. They are, of course, your most precious capital. We have doubled down at Ballantine in supporting those on the front line, helping our clients get through the crisis. Consider how important it is to care for your leadership team and employees, along with their families and support networks. During times of turmoil, your team needs to be aligned on priorities, feel valued and empowered, and have unwavering confidence in you as their leader. Your army, when inspired and assured, is a terrific asset, especially during these difficult times. And it's okay to ask a lot of your team. I'm asking a lot of my team. Push your people to step up. Make firm-wide priorities well known. Put the pressure on your team to show up in a big way, and then move out of their way and let them rise to the challenge. I know how tough that can be as a leader. It's important during these times to also show your gratitude. It'll go a long way. And encourage your team to rest and recoup for the next sprint. Above all, make sure they know you will see them through this challenge. While it's incredibly stressful and isolating to run your business, and even more so during times of tribulation, your team needs your steady hand now more than ever. We have used this moment to test our disaster recovery and business continuity plan, and to evaluate how smoothly we've been able to run our business remotely. Our employees in Atlanta and Raleigh have been working from home for over a week and a half, and we're pleased with the way in which this business continuity plan has worked out. We recommend doing this even if you are considered an essential business that can stay open. So moving on to some of the best practices that we all learned at Ballantine from the great financial crisis of 2008 and 2009. We learned so much from that experience, helping our clients navigate that last financial crisis that we experienced over a decade ago. There are some simple tactics that in the frenzy can often get overlooked. Just as I remarked, organizations need visible leadership. Back in 08-09, there were unfortunately too many ostriches with their heads in the sand. It is harder to be an ostrich in the coronavirus crash environment since everyone has been hit on all sides at once, but pretending things have not changed or that your strategic business plan, as Joe said at the outset, will not be affected is simply not an option in our view. Acknowledge in plain language that you understand where you are and that you are responsible for what is going to happen, focusing on what you can control. We've tried to make hard decisions quickly and decisively. Make bold decisions driven by data with clarity and confidence. Don't emotionally shoot first and ask questions later. Updated, accurate data from the front lines is the currency of crisis. Be sure that you are receiving that. It's also imperative to take stock of where you are holistically. Now is a good time to assess your financial plan and your long-term goals and make sure you don't miss the silver linings. Our head of financial planning, John Madison, wrote a resource on 3 financial planning problems that this crisis can help you improve as a business owner. Another partner of mine, Rob Ragsdale, wrote a blog on the things we can control and how to jump on some of the present opportunities. And as a reminder, all the resources I mentioned today can be found on our website at ballantine.com. That is Ballantine with 1 L. Remember, you can never over-communicate in a crisis, especially when it comes to your employees, customers, lenders, and investors. Communicate directly, clearly, and with empathy. Be authentic and transparent about both the bad news and the good. It definitely builds trust with your team. And don't play catch up in a reactionary way. Events are usually ahead of where they seem. That is one lesson I took to heart from the 08-09 crisis. Of course, as I advised Vistage groups to do during the good times of 2019, the best time to ensure access to lines of credit is when the economy is strong. But crises are when you want to over-communicate with your bankers. They hate surprises. My colleague, Dr. Mark Bell, who runs the business advisory practice within our multifamily office services platform at our firm, and he is another PhD. He often quips that his stands for piled high and deep. And a former McKinsey consultant, he wrote a piece on how to communicate with your lenders. He would know. He helped recapitalize a regional bank during the 08-09 crisis. And you can reference that as a guide when talking to your banker. Thirdly, on our advice to accept aid from the federal government. The government has finally acknowledged clearly the role of small businesses as the lifeblood of job creation and economic activity in our country. Let's take advantage of that. We won't spend too much time on this topic since Joe led a webinar on this issue over the last few days on the very issues that I've raised. All I'll emphasize is that the banking system will administer the government lending programs. The practical step you can do today is to go to your bank and inquire. Get in line immediately, as the line is already long and bankers prefer their existing customers. Be careful about opportunists who are suddenly holding themselves out to be quote unquote SBA consultants for hire. Deal with the bank preferably or the SBA directly. So here you see Vistage has the resource on loan relief, and we have a resource as well, my colleague Dr. Bell, on summarizing the stimulus packages. And fourthly, on the point to be strategic, you've got to be prepared to position your business for a post-crisis world. Don't only play defense right now. Start to think about being strategic in a number of ways. People are the most valuable asset of many businesses. That's certainly the case in my professional services firm. Crises allow the cream to rise to the top. It is a perfect time to reevaluate whether you have the right people in the right seats of the bus, as Jim Collins writes in Good to Great. Remember also, as one of my Vistage colleagues reminded me, that your competitors may be feeling the stress of the crisis too. Is now the time to blitz their best people and attract them to your business and to your culture. As Joe suggested at the outset, dust off your strategic plan and reforecast. How should you reprioritize new initiatives to take maximum advantage of a post-crisis world? How will your people, how will your clients and your customers behave differently? How will the cost of inputs and your ability to command maximum pricing power change to maximize your underlying earnings power? Don't let tactics go in search of a reset strategy. As Joe mentioned, lean into technology spend, especially in the areas of marketing and brand building. For example, the power of webinars to bring clarity to a discombobulated world can truly differentiate who you are as a business. For our manufacturing clients, we have urged them to begin thinking reinventing their supply chain to ensure disruptions experienced during the current crisis do not happen again. Of course, last year's tariff war had already brought this issue to the forefront. Our view is that the coronavirus pandemic will only accelerate this trend. Of course, in all things, be prepared to come out the other side tougher and leaner, but still able to compete and win in what will be a more competitive landscape for fewer customers. To that end, start thinking in advance about your pricing power and strategy if inflation does pick up as a result of all the free money and stimulus the government is providing to give the economy the lifeline it needs while we play the great waiting game. As I said earlier, crises bring both clarity and opportunity. They test your resiliency and adaptability. And for those businesses able to bend and not break, In our view, they present a golden opportunity to accelerate skating to where the puck is going to be, as legendary hockey player Wayne Gretzky famously said. So in conclusion, let me start to offer some thoughts using the toolkits of capital markets that I've advised Vistage groups on as to answer the question what this recovery might look like. Of course, the key question is, are we going to be able to recover more quickly than the typical cycle? In other words, is the back end of this crisis going to revert to the traditional predictable U-shaped recovery, or will it recover just as sharply and quickly as it tanked? Will it be a V-shaped, a U-shaped recovery, or even a W-shaped recovery? Or is this going to be so slow that it's more of an achingly flat line? Our answer to that key question is that it depends on how we are able to bend the curve to prevent the virus from overwhelming our healthcare system and get the economy to restart, even in a limited and regulated way, until such time as a vaccine is found. That ultimately, a vaccine will be the game changer. In last week's webinar, you heard from ITR how this will get a lot better when the additional black swan of the oil price shock subsides occurs. And that is true, that the collapse in the oil price have made things worse for the economy in the short term, as so many US energy exploration companies are simply not profitable at $20 a barrel for oil. But in our view, and this is the point that I wish to underscore, the real answer to whether we will have a V or a U-shaped recovery is going to depend on how quickly we can bend the curve on the rate of new infections. And on this slide, you can see just how chronic and a leading issue this is in New York State. And we view this as a bellwether for us as to determine how the rest of the country is able to cope with this pandemic. We at Ballantine are certainly not health experts, but it is encouraging how policy is now being shaped to a much greater extent by the scientists and doctors. And perhaps some relief will come from a combination of more testing being readily available, allowing people to go back to work under certain strict guidelines, quarantining the most vulnerable in our society, and getting the equipment to our first responders on the front lines, the really brave doctors and nurses that are helping us control this pandemic. And then ultimately a vaccine, so that we feel confident and assured that our healthcare system isn't overwhelmed like the healthcare systems so sadly have in Italy and Spain. In a fascinating turn of events, I'll share this vignette with you all. We actually advise a Mississippi-based company who has developed an alternative data and artificial intelligence capability that has for many years powered our military special forces. And they are now redeploying that capability all across America to gain real-time insight on how quickly our economy will get back online again. And I think this underscores the point about how this crisis could accelerate trends in technology we have all studied as Vistage members and how it could shape the future. And now, if that trade-off is the ultimate thing that markets will cue off of, I want to go back to my central message. Capital markets will continue to lead the recovery and its shape. They will bounce back before the economy does. We will be using the very same playbook we always have as far as where to go from here. So let's take a quick look at each of these signals before I hand it back to Joe for your questions. And by the way, our investment team are posting an update on our views on capital markets on Friday, April the 3rd. So I encourage you to look out for that on our website for further details. Before going to each of these capital market indicators, I will point out that it is worth noting that volatility appears to have calmed. Professional investors use the volatility index known as the VIX index to measure just how volatile markets have been. And that has calmed down to a 45 to 55 range, which still elevated is a far cry from the peak of 81 we saw a couple of weeks ago on March the 18th. That is important because it's an indicator to us that this particular panic phase and forced distressed selling we saw on the capital markets last week has at least ended. So let's turn our attention to the first indicator, and that, of course, is the stock market. The stock market, of course, has fallen over 30% intra-month from peak to trough, and despite last week's epic rally, remains in bear market territory. The question, of course, as I said at the outset, is what has been priced into the market in terms of future corporate profitability after a decline of around 20 to 25% at this juncture. The reality is that dividend cuts and share buyback suspensions have already been announced and continue to be announced, but the market, as I said earlier, has already begun to price that in. For us, as of now, the trajectory of the stock market continues to parallel what we saw in 1987, which continues to reaffirm, in our view, that a bottoming process has occurred. But this bottoming process will take time. So this first key indicator requires the stock market to continue to bottom and begin a recovery, and the speed with which that occurs will be a key insight as to whether to expect a V, U, or W-shaped economic recovery. Secondly, let's turn our attention to the bond market. Here, the bond market continues to send an encouraging signal in that the slope of the yield curve remains positively sloped. You all remember that the slope of the yield curve, and this chart shows it to be measured between the difference in interest rates on a 10-year Treasury bond and a 2-year Treasury bond. And here, the Federal Reserve had a playbook for the liquidity crisis that we experienced over the last 2 weeks after all the alphabet soup of programs that came out of their skunk works in the 2008-2009 great financial crisis. They got ahead of the last 2 weeks decisively by lowering interest rates to zero and promising to buy assets in unlimited quantity with its already impressive balance sheet. If the yield curve were to flatten, it could be a signal that the recovery may take longer than a V and be more like a U. The third indicator is credit markets, and as I said earlier, they are a proxy for corporate optimism. I often encourage Vistage members to think about that being a proxy for big business CEO confidence. And these have clearly shown stress with high yield spreads, that is the difference in which the rate at which corporate bonds need to be floated by big business over safer treasury bonds, have blown over the long run risk premium of around 500 basis points over treasuries. But I emphasize nowhere near the generational investment opportunity they became in early 2009. Of course, the stress has been most acute in the energy sector as a result of the oil price collapse. But you can already see here how they have come in noticeably after the Federal Reserve stepped up to provide liquidity to the market with a howitzer, not just a bazooka. The speed with which these come in will be an important clue as to the shape of the recovery and another key insight into sectors that may be permanently impaired by this great coronavirus crash. And then lastly, commodity markets. I know we as Vistage members tend to have a US-based bias when managing our business, but I'd like to remind you all of how important commodity markets are to the global economy and the health, especially of emerging economies such as China. And by this, I mean commodities that are used in the production of things such as copper, iron ore, nickel, not gold. Gold is more like a currency, and that is, of course, a topic for a much longer conversation. And here, if you look at the chart, and I will admit you have to squint pretty hard, there may be a thin silver lining. And this goes back to Joe's curve on China getting ahead of the recovery. Commodity markets have indeed corrected in the order of 20% or more, but not by as much as you might think if the Chinese economy was teetering on the brink of total collapse. The copper price is a key leading indicator of the shape of the global economic recovery, and that too should be taken in tandem with the messages that the stock, bond, and credit markets send about the shape and timing of the likely future recovery. A final point of emphasis: don't use these indicators in isolation. They should be used in conjunction with each other to construct a mosaic about what the likely future scenario is likely to be. But together, they will give you a high probability of what the future might look like. So there we are. All the resources I mentioned are available on our website. I encourage you to visit us online and to go to our insights area. And please call on us with any questions. We have a very deep bench of subject matter experts, and we know very well the camaraderie and honesty we have at Vistage and the ability to help one another sift through the mess during this black swan event. As it pertains to COVID-19, we have a corner of our website specifically earmarked for resources and market commentary with our investment team's thinking. And so now I'm going to hand it back to you, Joe, for questions we received in advance.
Great, thank you, Adrian. That was incredibly insightful, especially the way you've brought the immediacy and the urgency of where we are today, and how the data and your charts support all that. So we've taken the questions, we kind of consolidated them because they fall into some common categories. You know, are we, first of all, in your opinion, based on the data you've seen and what you've experienced, are we now at what I described in my chart as the bottom? We're now in the new normal of life under the current level of restrictions of COVID-19. Is this the new normal?
So we get asked this question a lot, Joe, and as you'll see in some of our investment commentary, it is possible for the stock market over the short term to have further downside, and we map out scenarios as to, you know, where we think a likely bottom will be. And so often markets in a bottoming process like to retest low points. Who knows? We are not market timers at Ballantine. We use our data and our insights to objectively confirm when a bottom has already occurred. But the point I would make is, and you'll see this in the commentary tonight, that the trajectory of the stock market is mapping pretty closely to what occurred in 1987. And you'll see in that chart that a bottoming process takes time to unfold. Our view today is that it is a little bit too early from an investment standpoint to start to lean into some of the generational investment opportunities that are going to become available. And so, you know, the word of the day is patience. And, you know, don't shoot first and ask questions later. So, you know, it is possible that the bottom is already in, but it's a process, and patience is the order of the day.
You know, it leads to the second question, which is, and you touched on this a number of times in your comments, but, you know, we're in the great wait. How long is that going to be? From a business planning standpoint, you mentioned the importance of cash. Don't run out of cash no matter what you do. Well, for some businesses, their runway's not as long as others, and they're asking the question, how long, what's the planning horizon for when I can begin to think about maybe my revenues will start to come back, or there'll be more business activity?
Yeah, so I think what is useful in assessing that is to keep an eye on the Chinese and the South Korean experience. You know, if you look at the trajectory that China took, basically shutting down its economy in the middle of January, and now by the middle of March, it's already starting to fire up its economic engines again. That gives you some sense that both China and also South Korea that handled this global health pandemic in a much more proactive way is around about a 2-month period of time where the great waiting game needs to occur. I will be the first to acknowledge that our economy is far more complicated and diversified, and we live in a democracy where people have the right to choose behavior that we may not map closely to the sort of optimistic Chinese, South Korean scenario. And it's going to take time to restart the economic engines. And so, you know, from here on out, it is conceivable that the great waiting game lasts April, May, and June. And I think we have taken the view in our firm at Ballantine that the great waiting game may last as long as June 30, even though we're already starting to think about strategic opportunities in the back half of the year. All of that means plan your cash and husband your cash resources and your cash flow accordingly. And as I said during the webinar, you know, make sure that your CFO and your team provide good data and are able to provide you a scenario that not only includes a base case and a worst case, so that you can get ahead of some of the more difficult decisions you might have to make if your business did not enter this crisis, you know, from a position of strength. So I hope that's helpful.
Yeah, it is. It sparks the next question. This comes from me, which is when we get to the other side of this, and there will be another side of this, and we look back on this period of time, what will be the great learnings? I mean, we mentioned we literally fell off a cliff from March 2nd to April 3rd. What do you think the big learnings will be in retrospect?
Wow. Wow.
I know it's a
Well,
hard one. It's a hard one, but it's.
well, there are going to be all sorts of implications, I believe, for policy. And it's going to be very, very interesting to see the political cycle unfold between now and November. I think one of the lessons that everybody has to relearn is exogenous shocks do occur. That doesn't mean that you should invest or manage your business to a worst case unimaginable outcome. It does mean that you should invest and manage your business with a strong balance sheet, paying attention to your cash flow so that when these unpredictable exogenous shocks occur, you have a good margin of safety not to impair your capital in your investment portfolio or to make unnecessary decisions in your business whilst you're managing through the crisis. I think there are going to be all sorts of implications for businesses about realizing the productivity gains that they can make by leveraging technology, just as you and I have done today through our webinar. And then I think one of the very, very big issues that the world will confront is, this idea that globalization and integrated supply chains across the world that led to a very disinflationary period of time is going to be rethought. I listened to Speaker Pelosi this morning being interviewed by Jim Cramer, where she acknowledged how important strategically it will be for our own country to ensure that supply chains for our healthcare system are located right here in the United States and not abroad. And I think this issue, of course, was prompted by the trade war last year, specifically where businesses were so reliant on China at the beginning of their supply chain. That is going to have a profound change, I think, on the economic landscape. I think it's going to meld with, concerns about how much of the stimulus may eventually create more inflation, which is not necessarily a bad thing and something that can be planned for. But if that does occur in the back half of the year, I'd encourage Vistage companies to start thinking about what sort of pricing power they have. What is their competitive advantage so that they can get ahead of that and put their companies on a trajectory of even greater profitability. So I think tentatively, those are some of the conclusions that I've reached generally. I think from a pure wealth management industry, which is where we operate, I can get into a lot of specifics as we've thought about that. And, we are excited for the opportunities it brings our firm in the back half of the year.
Peter, that was a brilliant answer. Let me ask you just one more question, and then we'll close up. And that is, you opened up when you were talking about, take care of yourself, right? Up in the section where we're talking about build resiliency. Take care of yourself, manage your stress levels. What are you personally doing to take care of yourself and manage your stress levels? Because you're on the front lines, you're seeing this data coming in, you're talking to businesses in distress. It's not just your business, but all the folks you talk to. What are you doing to keep your brain solid?
Well, I appreciate that. Like many of you all, it's been 15-hour work days round the clock, for the last 3 weeks. And, I'm very, very fortunate in that I have a very cohesive team that have practiced and run the drills for this environment, and we're working well. But that does not make light of the stress that I'm sure so many of you all are feeling, which is the responsibility and burden for so many families and the decisions you have to make very quickly and in real time. And so I'm listening to a little bit more classical music, Joe, late at night. I do read speeches that inspirational leaders made during more stressful times. I remind myself that the world has seen darker days, even though this feels very real and discombobulating, but the world has seen darker days. I'm a South African born citizen of this great country. And we are so lucky to be able to operate our businesses in the United States where entrepreneurialism is encouraged. I feel good about the fact that policymakers in Washington are realizing the importance of small to medium businesses. And by the way, Joe, I wish to pay you a compliment for finding and bringing the Vistage voice and the perspective to bear. So much of our media is focused on what matters to big business as opposed to small business. I think you've done a terrific job in galvanizing the Vistage view of the world, and I thank you for that. So I take comfort from that, and then I'm focusing on some of the smaller things like, my backyard is actually quite beautiful, and it's nice to have conversations with my teenage son and daughter and my wife and scheduling walks. And so that's my playbook, and I'll stick with it.
Well, that's great. Glad you're taking care of yourself, because we're going to rely on your insight going forward. So we'd like to thank you again for your thoughts and your insights. Adrian Cronje, has just been a great conversation today. We'll make this available to everyone. And of course, the resources that he mentioned at Ballantine are there to help you collect information from resources and people you trust and respect, add those perspectives to your judgment, and make the best decisions for your business. Because as we move through this and begin to get up on the other side, the decisions you make will be rewarded or punished as this plays out, however it does. So Adrian, thank you very much. Thank you to all that chose to come in today, and we'll look forward to the next webinar we do, trying to help our members understand the Corona crisis and how they can best navigate it. Have a great day, everyone. Thank you.
Thank you.